Welcome to this demonstration of Sage Corporation Tax, the standard variant of the software. We're going to get information into the Corporation Tax software by importing it over from Sage Accounts Production Advanced. Now obviously you can input the figures manually into the Corporation Tax software. However, it's a good idea to have a look at the integration between Accounts Production Advanced and the Corporation Tax software, just to see if it could benefit your practice and streamline that process for you. So first of all, we'll just have a look at a set of accounts within Accounts Production Advanced. So we have a set of accounts here. So we can see the profit and loss on the screen, and I'll just leave that minimised while we go over and do the Corporation Tax export. And it's just to show you that it will be exactly the same figures that end up within your Corporation Tax computation. So first of all, if we go to our export down under the Sage links, then we have the ability to export to Sage Corporation Tax powered by OneSource. It will pop up with a wizard, and it does invite you to either bring the information into an existing client, and as part of that process it can set up a new year for you if required, if you haven't done that previously. But in this example we'll set up a brand new client. If a mean accounting date agreement is in place with HMRC, then please tick the box and put in the relevant override dates in there. And then the company type we're going to do today is a standard trading company. Specify the breakdown of the client code, and then the next window will show you the adjustment schedule which will be included, and the different profit and loss schedules as well. It will run through importing all of the relevant figures from the accounts into the Corporation Tax software. And when it's done so, it will finish up on the profit and loss account. There's a very handy button along the top menu buttons called the final one with the green tick in it. If we click onto that, that will compress your P&L into a view which is easier to read and only got the relevant items in it. So if I just move this over and we pop back up with our profit and loss account, then you should see that it is an exact replica as it was in the accounts. I'll just give you a moment to review that. Coming down to our profit for the financial year before tax, in this case, of 9,578. We have a tax amount which has already been populated to give us the 7,117. Now obviously in most cases you wouldn't already have a tax figure in there. It's just the information that we've brought over from the Accounts Production Advanced software that does have the tax value already posted. So we'll just minimise them down again. So what we'll see in here is hyperlinks of information which is cross-referenced to other areas where we get the detailed breakdown of those values. So if I click onto the D2, you'll notice we have our list of schedules down the left hand side here, and these have all been automatically generated based on the information that came over from the accounts. Now if there's any of these amounts that are required to be added back, then you can do so by changing it from the final mode into data entry mode, which you'll simply just do in a moment. So I'm sure you get the idea that there are lots of items in there to be able to review. If we move down to general expenses, for example, disallowed automatically is the item of entertaining. There may be other items in there, so say we want to disallow some of the laundry and cleaning, we would come up to the top. change it into data entry mode using this icon up here, and then either specify a percentage or an amount. You can use formula in here as well, or simply type in an amount. You'll notice down the bottom when I type in the value, it does ask me for a source. That's just for your own practice reference, so you know where you got that item, where you can justify that the £500 should be disallowed. So once we have input all of the relevant disallowed expenses, if we come down to depreciation, we have a breakdown of amortisation of any intangible assets, depreciation, which will automatically be added back, amortisation of government grants relating to fixed assets, and any profit or loss on disposal of fixed assets as well. If you want to see the detail behind that, then you can click onto your fixed asset disposal and you'll see the depreciation coming through in there. We do need to specify what type of asset up the top that it has been relating to, but we will come back to that at a later point in the demonstration. So just jumping back up to our profit and loss account, you'll be pleased to know that all of these cross-references that you see on the screen can also be printed when you print off the computation for review. So moving on to the fixed asset area, clicking on the fixed asset section itself, if we come up to the data entry button, you'll see that there are some values that need to be input. So the input boxes are the blue ones that you see on screen, and the system does have a validation checker, so it knows per the accounts it's looking for a certain net book value at the end of the period, but it doesn't know the detail in terms of what capital allowance categories those assets have to be assigned to. Under the C2 schedule, we do have a summary of fixed asset movements, and again we can put this into final mode just to see what it looks like at the moment. So per the accounts, we do know what the movement has been according to the accounts headings, but again we need to specify where that all falls within the different capital allowance categories as well. So to do so, we go back to the fixed asset schedule and we come up to the develop menu, and we simply develop the different types of allowances that are suitable for this client. So we have our general pool up here, any special rate assets, we have our annual investment allowance, we have our non-pooled cars, so used to be our expensive cars are in there. If there's more than one non-pooled cars, car disposals, industrial buildings, so single site or multi-site IBAs, same with your agricultural buildings, any short life assets, and we also have an other allowances category, things such as ships, mineral extraction, and business premises renovation allowance are all contained within there. We also have another reliefs area, reclassification and analysis, if anything has been changed, and a transfer of trade, if applicable. So in our example, we require a general pool, which again we can unsquash to see the details behind there. We need to input the tax written down value of that pool at the beginning of the period, which we'll just make up as £15,000. You can put in K as a shortcut for thousands and M as a shortcut for millions as well. And as soon as we have the plant pool generated, then you'll notice if we go back to our fixed asset schedule, then we now have plant pool, fixed first year allowance and general plant pool categories to add in additions to in terms of the values that have to be populated in there. We'll also add in a motor car, so again back up to your develop menu, go down to cars, and we'll just do it as a standard non-pooled car area as well. We can input the registration details, the make and model if you require, the cost, which will limit automatically to give you your tax written down value brought forward from last year, input there any additions and proceeds, and it will calculate the writing down allowance and populate it onto the relevant adjusted profit comp schedule. So again, just jumping back to our fixed assets, you'll see that we now also have a category where we can put our non-pooled cars. So at this point, we will just refer back to our account. So again, I'll just pop up the accounts, and this time we'll scroll down to our fixed asset note, so I can pick up some relevant values for you in there. So we can see in here that we have our plant pool. Those qualifying for first year allowances would be put in here. But first of all, we also need our net book value at the beginning of the period. I'm just going to move that over just to make that a wee bit easier for you to see. So our net book value at the start of the year in total was 89,838. And obviously if we had done the corporation tax using this software last year, then that value would have been pulled through automatically. So now we've got our net book value at the beginning of the period. We can now put in our additions in the year. So our additions total 30,400. We have our expensive car of 25, so we'll just put that in first of all. And then we also have our 3250 of fixture and fittings and 2150 of plant and machinery. So what we'll do is we'll say that the 3250 is some equipment that is eligible to claim first year allowances, and the 2150 is simply just general plant and machinery that gets no additional first year allowances on it. We have our 3250 of plant additions which can claim first year allowances. So we click on to the link to the B schedule. You'll see your fixed asset additions qualifying for first year allowances in there, and then further down we're able to specify the breakdown. So do we have any that qualify for the energy saving or environmentally beneficial equipment, or is it any other qualifying assets 100%? So we'll put them in as the general 3250, and again we can squash that up using the final button. So we can now see within the plant pool we have our tax written down value at the beginning of the period, our additions qualifying for written down allowance, writing down allowance on that, and then the first year allowance, which is specified in more detail down below. And then that value will end up on your A schedule. We'll then have a look at the fixed asset disposal schedule. So clicking onto the C1, we get the chance to break down the disposals into the relevant pools. So we have our plant pool in here. So again, just referring back to the accounts, we have our cost or net book value on the plant pool. So we have our cost, which is 1550. Our accumulated depreciation on those disposals is 1300, which, as you can see, our accumulated depreciation on the disposal is 1300. So if we enter that, I'm purposely going to put it in the wrong way around. So you'll see in here that because there's a bracket round the column header, this item should have been a negative. So to make it a negative, we can simply click on the reverse sign along there, which gives us our net book value of 250, which is written off against our disposal proceeds. The disposal proceeds were 135, which equated to a loss on disposal of £115. It was only plant pool items that were disposed in the year. We can see here that we need to now check this against our fixed asset schedule. So in here we do need to confirm that the disposals at net book value the net book value of the disposals being 250, and again we just need to change that to a negative. And we can also input details of the non-pool car additions by clicking on the B2 and entering the registration details of the car that has been added in the year, which again we can squash up into a more manageable view. So that takes us now to our adjustment of profit comp. So in here we now have our profit before tax, general expenses, depreciation and loss on sale, our capital allowances for our plant at first year allowance level, our general writing down allowance and our non-pool cars to give us our total taxable profit, split over the two different fiscal years to give you your corporation tax due for this client for this current year. We can also add in if there were any chargeable gains. So chargeable gains are managed through the E section, and to do a chargeable gain you would simply come up to the develop menu and you select whether the asset is acquired after March 82 or rebased. If it's held on the 31st of March 82, if it's a part disposal, or if it's a very old pre-1965 asset. If it's anything that's on a lease, or any other areas that have to be developed from a gain perspective, or loss in that case. I'll just show you briefly the way that you would manage a standard asset which was acquired after March 82 or rebased. So you can input a description of the asset in here. So we'll just put painting. We'll put the date that the asset was disposed of. So we'll put in the 31st of July, say, 2012. And then simply the proceeds, which 56,000. Any incidental selling costs, which we'll just detail out at the moment as legal, but you can put in more detail against there. And then you need to input the date that it was purchased. So we will go for the 1st of May 2000. We'll say that the painting cost us 20,000 back in the year 2000. Legal costs at that point were only £500. And again, we can squash this up to show that the calculation is the net proceeds are 57, total expenditure 20,500, an index gain of 36 less the indexation allowance, the change in the value of the money over that period in time to give us a chargeable gain now of 27. If we click onto the hyperlink to E, you'll see the accumulation of all the chargeable gains appearing on the schedule, and then click onto your A, and that will now take that chargeable gain into your adjustment of profit, pushing your corporation tax due now up to just over £8,500. To submit this corporation tax return to HMRC, you do need to first of all develop the CT600. Now you'll notice that there are other options in there that you can do as well. So if the business has property income, if there's any reliefs, if you want to manage payments on account, tonnage tax, that's all in there. If we develop the CT600 return, those pages will be visible in your navigator down the left hand side and all pre-populated. You may only want to do the short return, which is fine, that's in there as well. And then if your client requires any additional pages, then you can generate them by simply coming back up to the develop menu from within the return itself and populating any of the required additional schedules. We're then able to come to the File menu and File Online, at which point it will pop up with its validation checker to make sure that you do have all of the relevant information included for the submission. We need to input the tax district reference number and the UTR. Once you've done that for 1 year, it will carry forward year on year. Then we simply input the status of the CT600 signatory, come back to File Online again, and it will at this point create a new submission package. The format of the accounts would be in IXBRL format, which we would browse for the file. I don't have an IXBRL file of that client, so I'll just pick up another one which will then from the online filing wizard will pop up asking you to either create a new submission package or use a saved one. We'll then browse to the accounts file, which is generated by our either accounts production or accounts production advanced software. We click on to next. We see that we're happy to do an IXBRL version of the computation, which will launch the tagging wizard within the corporation tax software. We highlight the items that we want to have tagged within our computation, and it will do that automatically, which you can then show the details against if you wish. So if you do want to see exactly what the tags look like, then please feel free to review them in there. Click on to finish, and then your final option within the corporation tax software is to browse for a PDF file of any additional supporting information that you want to submit with this return. So there's no requirements to do so. It's entirely up to you if you want to add in maybe a covering letter at that point. We'll check everything's up to date. This will all be bundled into one submission package, and it will do some cross-verification at this point, just to make sure that it is the correct set of accounts that has been linked to the correct computation. We can save the package to disk for submission at a later date, maybe if you're not working online, or you can simply click on to next and at this point you're asked to enter your Government Gateway user ID and password. And you'll be pleased to know that you can tick the box to remember the credentials, and we can also test it in the live environment as well. We can click onto the Submit button, and that is how you produce a corporation tax computation within Sage Corporation Tax software and submit it along with the IXBRL accounts to HMRC. Thanks for watching, and I hope to speak to you again soon. Thank you.